Hello everyone, this is Julian from the Binary Lab, and in this video I'm going to be talking to you about the BREXIT. So the BREXIT is something that a lot of people have been watching for the last couple of months, and especially this week. As we can see from this week alone, there's a lot of anticipation resulting in a big weekend gap that's much bigger than the usual. Over the weekend it's gapped about 120 pips compared to in previous weeks. It gapped, like let's say on last week, it gapped only about 59 pips, 60 pips. The week before that, let's see, the week before that there was not even a conceivable weekend gap. There is a very slight weekend gap over here. The week before that is just a very slight weekend gap of about 39 pips. Okay, compared to 120 pips this week, that's significant. That's because a lot of anticipation is building up today. There are different ways that we can see that as well. But a couple of points that we should cover in this video is that how you would trade it, how you can look out for opportunities like this, and at the same time, if you have really missed it, and what I want to tell you up front is that you have not actually missed it. There's a lot of opportunity left to be had, despite the retracement here, and I'm going to be teaching you how you can pick up opportunities like this on a very daily basis. But let's first talk about how to trade this BREXIT. So basically, the thing to note is that we always the best ways to trade events is breakouts, and breakouts can be done a few different ways. Breakouts can be done based on a rectangle setup, which you guys may have seen. So let's say when you see some kind of a consolidation, very tight consolidation, the key is to see what's going to happen from that consolidation. So let's see if you can find a small consolidation, like let's say at this point of time it has hit some kind of an apex of a movement, and this would be a rectangular consolidation. But in this current movement is something very different. We don't have that rectangular consolidation. There is not a period of a few waves that is in the top, but on the other hand, what we do have is something else which is also quite good, and that is actually an upward channel. You can actually draw an upward channel using the E tool over here. It's an equidistant channel, and then you can actually draw what is known as a best fit line. A best fit line is a line that simply passes through the most of the points. There are some points where it does not encompass, such I'm going to try to best fit this one to be just this line that doesn't encompass, and then the upper line can be shifted around in any way that passes through most of the points. So I'll adjust that until it hits the edge of the most candles. There we have our best fit line. Okay, so the ways to then trade a channel breakout would be a double close technique. What is a double close technique? A double close technique is when we see two consecutive candles closing outside it. So we basically did a H4 just to identify, to get a big overview, but then we'll really be looking at a smaller entry. I say like a H1 or M30. So going over to a H1, I can better illustrate to you what is double close technique. This is the first close. The first close outside, I'm going to be marking it outside. The first close outside of the best fit line. Would this be a valid trade? No, it would require to have two successive closes, which we do not have. This one didn't. As soon as it came back out, it went back inside. Most of the time, when we get a very small movement that is just like barely outside the line, you really do want to watch what's going to happen next. Very often, it's going to be like a very minor dissonance that is getting corrected almost immediately over here, and as you can see, the same thing has happened here as well. So over here, it did close to the upside. You may have just about thought that it's going to break to the upside, but then again, this is not even a significant move to the candles around it. So one of the criteria I really look at when trading a breakout is that, is the movement significant? Is it is the move that happens is it able to get outside of a channel? Okay, let's say if I've seen that a certain candle is longer than usual, is it simply still staying within the range like this? Is still staying within this range, or has it really gone out of it? So this is one candle that is very obviously and irrefutably outside of the typical range in terms of length, also outside of this range. So when I see that on the next candle is actually continue to stay outside of it, and in fact form a little bit of a doji here. It's like a little bit bigger bodied doji over here, and then I know that two closes outside, I can actually start to take my entry on the very next bar over here. So this is, in this case, my first close. This is, on the other hand, my second close, and that would be my entry. And then how I would then do this is that, okay, if this is going to be my entry, what would be my stop loss? Okay, the stop loss can be done a few different ways. The stop loss can be done just back inside of the channel. I like to usually use like a midpoint. So let's say if this is the channel, I'll use somewhere around the midpoint of the channel, being somewhere around here. And so if I use the midpoint just somewhere around here, if that was my stop loss, I'm gonna paint it in red. Then my stop loss is effectively about, let's measure that distance from here to here, about 365 pips. If I want to take it to the most recent swing, it would be about a 500 pip stop loss. And let's say, how would I make the most out of this movement? Of course, we all know that the market zigs and zags. The best way to do it is to give it, say, about what I would typically do is that I'll give it, I like to give it, I do it a few different ways. I often believe that the market moves in waves, and I believe that, you know, about 3 to 5 bars is usually a very, very good amount. So I can actually have a dead stop. This is one of the principles that I have learned from binary, is that, you know, if I give it like about 5 bars, 1, 2, 3, 4, 5, and I would have my exit, absolute exit around here. And this is good enough for about 850 pips. And at the same time, if I had a 3-bar stop, it would be 1, 2, 3. It would be about 1,072 pips. Obviously not the whole movement. There are other ways of doing it. Is that, you know, some people like to do a take profit based on 2.5 times. Sorry, 2 times, 1.5 times. I usually like to go for about 1.5, but sometimes on a big news event, if I'm anticipating a lot, I'll go on 2 times. So this is about 365. So 2 times would be about 700. 700-ish would be about say about here, and that would be my 2 to 1 risk reward. If I went 2.5, it could be more. But what I really wanted to show you, okay, like I said at the beginning of this video, a lot of you may have felt that you have missed the boat in a certain way. A lot of people felt that you missed an opportunity to grow your account by, you know, 20%, 50%. You're sitting there thinking that, you know, oh my God, I missed the opportunity of the century. No, you have not. Okay, the reason for that is because with a good risk management technique, you actually realize that movements like this are not just once in a blue moon, but actually they happen at just about every day. With trade sizing, okay, let's think about this. With trade sizing, you know, the thing you need to know is that a lot of you will not be even able to take this trade, because if you put it on a 0.1 lot on a FX position, what's going to happen is that if you wanted to use a stop loss that's at the previous swing high, which is really high, it's like 500 pips, right? 465 pips, and on a mini lot, a 0.1 position, that's going to already set you back 465. And I know a lot of the beginning traders don't really start an account with a lot of money. You're probably going to get a margin call already if it ever came back that much. But at the same time, you know, we do know that it broke out one way and went along. So yes, you would have grown your account by a bit. But the thing is this: if I were you and I know the amount of risk that I'm putting my account up to, that sends chills down my spine. And let's say, you know, if you took this at a 0.01, then you may notice that, you know, you're actually taking a very small position size compared to your usual positions, which could be more, which could be 0.05, 0.08, or whatever. I'm assuming that you have like a small, like for those of you who have like a $500 or $1,000 account. So what I wanted to say is that this trade here from the high, let's say if we were to take from this entry, let's divide this amount, which is 100, is like 1,300 pips, divided by this, with about 4, like up to the swing high. Yeah, that's about 500-ish. So that is just about 2.8 or 2.7-ish times, 2.6 plus times, 2.6 plus times, which is actually, you know, I'm going to show you something else. Let's go. I'm going to change the H1, and I'm actually going to put a little different template over here. This is just a very simple MA line, and what I can show you is that, you know, they're full of examples, and it's all over the place where I can have a very small stop loss based on the previous swing high, just using a simple MA cross. Being, let's say if this was the previous stop loss, this was my entry, and then exiting on the next cross is 168 pips versus a 21 pip stop, and that you know is just about a 7 point something to 1 reward to risk, which is actually much better than what you have seen. And there are many more examples here that you can see that is actually about you know, over here this is about 1 to 1, perhaps 1 to 1. There are many examples. As you can see, all these are huge. And if you thought that today is because the activity is intense, do you know what? Let's look at today's activity and what would be an even better way to trade. An even better way to trade today's activity would to use the same kind of lot size. So let's say if you don't want to risk too much, you can just risk about, you know, like 2% of your account, like what most people would suggest, and then size according to your stop loss, what is going to be that 2%. So let's say if you're picking small ranges just like this, if let's say this was your entry and this was your previous stop, this is like a 102 pips stop, size set to 2%, and then based on your next exit. Okay, this one is not so fantastic, but there are many series of this. Okay, sorry, this will be the first close up. Let's be the first close up. So that's still about a 1 to 1 reward. And there are other ones like this as well, where you get a close up. This would be another opportunity you could have done, where it's a 204 pip versus a stop of about 50 pips, 4 to 1 ratio. So rather than taking, you know, one big entry and having one big stop loss, I would have broken it up to many different smaller ones. And you know, it doesn't even have to be the BREXIT. It can, as you can see, I'm going to scroll back to the 23rd. This is the 24th. Going back to the 23rd, there are actually many nice opportunities that can be had as well, where, you know, the risk is the same, if not less than the reward. And for the times that the reward is less than the risk, just using a simple MA cross, you know, you can actually pick up plenty of profit. And many of these moves are far bigger than in proportion. Okay, not in terms of pips length, but in proportion. This over here is a move of about 30 pips to be had for about 12 pips of risk. So scrolling back, scrolling even to the 22nd, because 23rd I know was a big day on the daily chart, but scrolling to the 22nd, I'm going to show you that there's actually very ample opportunities that to be had just about all the time that you may not even be aware of. So just look at some of these ones, and there's some very huge movements. And let's say, you know, I know that a Monday, Tuesday, Wednesday were very tight ranges. Let's go back even further on the charts and find those. And the point really I want to show you is that there's just too much opportunity that to be had for very little risk. So if you're interested on learning more about this, definitely stay tuned to this channel. Click like, click subscribe, leave a comment below if you found this interesting. I'm actually looking just to also teach people about trading forex, because like I said, using the methods and knowledge I've gained in binary trading, in teaching the binary lab for the past 3 years, there has been a good demand. At the same time, there's also a very good, I believe, a very good opportunity for very small risk, very high reward in forex as well. So do check back often to this channel. I will be releasing videos on forex, and I'll be releasing details on how you can get involved in my forex training project that's going to be coming out really soon. This is Julian from the Binary Lab. I wish you guys a good day, and once again, with the BREXIT, trade well, trade safe. Look for other ways. Look for other ways rather than going for the big fish. Sometimes going multiple times for the smaller fish but in bigger amounts is going to make you a whole lot of money as well. Goodbye, everyone.